Hello, and welcome to Crypto Exposed. So there's been a lot of hype and hysteria at the moment with the collapse of Silicon Valley Bank and obviously the ongoing issues that's caused, the knock-on effect. And it is a banking crisis that we've got going on right now. And so what I just wanted to do is I wanted to break down just literally how this has happened and also to explain how XRP and cryptos in general can actually stop this or help it, right? This is where crypto and specifically XRP can shine in this circumstance. So there's three things I'm going to show you just to break down exactly what's going on, why this is happening in terms of the banking crisis, and then I'll explain how crypto and XRP could actually step in here and be able to help some of these situations. Okay? Right, so the first thing I want to show you is liquidity crisis. Okay, so let's just read what this actually says and then I can explain it just a little bit further for you. So a liquidity crisis occurs when a company can no longer finance its current liabilities from its available cash. For example, it is no longer able to pay bills on time and therefore defaults on payments. In order to avoid insolvency, it must be able to obtain cash as quickly as possible in such a case. Okay, so liquidity crisis. Let's just think about this from like the Silicon Bank perspective, right? Once we were seeing that Silicon Valley Bank was facing collapse, what was the thing that happened? Well, there was customers who were depositing cash who was potentially going to lose out on money, right? Because there was only a certain amount of money that was insured for them to be able to have back. And so this is where the kind of the dirty side of banking comes in, because what is possible here is that when they're in a situation like this where they're insolvent, they can actually be using depositors' money, right? And so they're using other people's money to pay their bills to keep them going, hoping that that will help them stay afloat for longer until they can actually turn their business around and potentially become solvent again, right? So that's where the problem comes in regards to liquidity, and that's the problem with that. And it's not right that these things happen, but unfortunately, this is, it is a scenario that does happen in the banking world. So this is where it can show you what can happen when a bank is facing a liquidity crisis. Okay. So the next part I'm going to show you just in regards to this is fractionalized banking. Okay. So if I just quickly drop this down so you can see this. What is fractionalized banking? Fractional reserve banking is a system in which only a fraction of bank deposits are required to be available for withdrawal. Banks only need to keep a specific amount of cash on hand and can create loans from the money you deposit. Fractional reserves work to expand the economy by freeing capital for lending. So, let me give you an example like this. I've broke it down before, but it was very quick because I was doing a different type of video. But let me break this down. Let's say you've got a bank, okay? And that bank has in total £1 million of customers' money. So they could have, let's just say, 100 customers. And in total, from those 100 customers, they've all deposited £1 million in total. Okay? What fractionalized banking means is, even though they have £1 million of customers' money, they don't actually have to have £1 million available to be able for customers to withdraw. And this is actually legal. So they only actually have to have a fraction of that £1 million. Okay? So let's just say, to give you another example with regards to like Silicon Valley Bank, this is what they call a bank run, right? Let's just say rumors go around that a bank is insolvent and they're fighting to stay afloat. So then the words get around, the customers are hearing this and they're a bit worried the bank is going to go down. So what do? They all rush to the bank to withdraw their money to try and get themselves safe and keep their cash. But unfortunately, the banks haven't got that much money on hand. Why? Because they only have to have a fraction of it. So what actually happens is the £1 million goes into the bank, and then the bank can use that money to actually lend out to other customers. So there may be £1 million of customers' money in the bank, but the bank may have lent out, let's just say, 400,000 of that money to another customer for a mortgage for like a business company who want to go out and buy a building for their office. And so then, there's only £600,000 available. So let's say there is a bank run that happens later on, and then they say, hey, we're all coming for our money. Well, what happens? They haven't got the additional £400,000 that they've lent out to this other business. And so the bank run is now successful, because if they take out that money, the bank hasn't got all the money available. So they're insolvent. They haven't got the money to give back to the customers. And that's why you'll probably notice if you ever try and withdraw certain amounts of cash, they might ask you, or they might say, hey, you need to give us some notice to do this. And one of the complaints people say, well, it's my money. Well, legally, they don't have to have that much money on hand. They're not going to tell you that's the reason, but legally, they are actually able to do this legally. And so people don't know this, and this is where a lot of the issues come into play. Now, unfortunately, you pretty much need a bank account in this day and age to pretty much function, right? Direct debits, general payments in terms of your salary and things like that. It's hard to get around having a bank account in this day and age. So, it's hard to say, hey, just avoid the banks. It's not really that simple. But unfortunately, this is the way of the world. So now, let's look at everything that we were saying. You've got fractionalized banking, where they can give out loans and mortgages and things like that, where they're basically spending depositors' money. So if a bank run was to occur, a lot of banks would be in a bad position, because legally they don't have to have everybody's money available to give back. So that's the thing. If a lot of banks had these bank runs, they'd all be in trouble. They'd all have issues. And I think this is where, like, what would happen is a lot of banks would just shut down for a while, hope everything calms down. Obviously, that doesn't always work out, but that is generally the play. So you've now got the liquidity crisis as well, because they might be also using your money to cover their own backs to try and pay their own bills, because they're, not staying afloat themselves. They're also lending money out to other companies because they're trying to get money back over the long term as well. And so, generally, the customers are the ones who are getting screwed over here, right? Okay, so there's just one last thing I want to show you here, and then I can get to explaining where crypto comes into this. So, nostro, vostro accounts. Nostro and vostro are accounting terms used to distinguish an account held for another entity from an account another entity holds. The entities in question are usually banks. The terms nostro and vostro are used mainly by banks when one bank keeps money at another bank. So, I'm going to try and break this down and simplify it as best as I can for you guys. Let's just say you've got two banks, okay? You've got a bank in the UK and you've got a bank in America, okay? And you've got customer A who wants to send money from the UK to America. Let's just say they've got a family member in America, and they want to just transfer some money over to their family member, okay? So customer A wants to transfer some money from their English UK account, which obviously will hold pounds sterling, to go over to their family member, customer B in America, which were obviously meant to be dollars when they receive it, okay? They actually aren't going to send the money internationally. That's not what happens. What actually happens is the bank, so let's just say Bank A. Let's just say Bank A is, let's just say it's Santander, okay? So Santander wants to transfer money from pounds over to Bank B, which let's just say is Bank of America, okay? So Santander is not actually going to transfer the money internationally. What would actually happen is Santander will have a nostro and a vostro account, and the vostro account will be over at Bank of America. And what this account will be is literally just an account that Santander hold with the Bank of America, and it will be in dollars, right? So what will happen is the customer A says, okay, I want to transfer £500 worth of money over to America, because obviously we know there's an exchange rate, so it's never going to necessarily be exactly the same. It could be more or less depending on the exchange rate, right? So what will happen is Santander will get the request from the customer. Okay, we've got to transfer £500 worth of dollars over to customer B at Bank of America. So what they'll do is they will calculate what the exchange rate is, and then they will say, okay, go and contact Bank of America and say, we need you to give customer B this amount of dollars from our vostro account, okay, which is basically their own account, which they already have with dollars in that bank, right? So it's actually a prepaid account, and this saves them actually having to transfer the money manually over, right? They still have to obviously figure out the exchange rate and give the instruction, but the money is actually already over at the other bank. And this is what they do worldwide. This is what banks do. They all have accounts in other banks just ready for cross-border payments, right? Now, the problem with this is that it's a bit inefficient, right? Because it just means that money is just lying there dormant, just waiting for cross-border payments. Now, don't get me wrong, I'm sure there's a high volume of cross-border payments that happens daily, but this is money that they can't really touch because they have to keep it in all these other banks ready to do foreign payments. And so it just means that money is basically frozen, right? And it's just a lengthy process. So this is where crypto comes in, right? And specifically XRP. Well, XRP actually can do transfers and settlement, being the key word here, in 3 to 5 seconds, which basically means that the money will actually transfer from one country to another country, and the funds will be in that other country within 3 to 5 seconds. That's the settlement aspect of it. There's no waiting for the funds to still go through. It will actually be done in 3 to 5 seconds. So what does this mean? Well, why would you need a nostro vostro account in the future if you can actually just transfer the money instantly, right? This now means that why would you need the nostro vostro account in other currencies? Because what XRP will do is it will take the money that's in the one currency, so the UK pound. It will do the transfer wherever it needs to go, and it will then exchange it into the other currency of where it's going to, so into US dollars, in 3 to 5 seconds. So there's no need anymore to have all this money laying dormant in these nostro vostro accounts, which takes away the need for nostro vostro accounts, right? And what does this mean now? Well, all that dormant capital that they have sitting there on the sidelines is now money that's free for them to use. So now that money that they keep just laying around, which can be in the billions when you tally up between all the banks that they've got nostro vostro accounts with, because they're all doing it together. They're all having to do it, they're all intertwined together doing this. Once you take all that out, well, now what can you do? You've got capital to be able to lend out more, right? Pay the bills, right? Try and capitalize with that money, invest, etc. Things you can do to grow the business, right? This is what will happen if XRP is utilized. And this is why XRP, I believe, is such a powerful crypto. Now, I will say this. One of the things that this will appeal to more is actually the smaller banks, right? Why? Well, with nostro vostro accounts, it's mainly like the bigger banks who do this because they've got the spare capital to be doing all this nostro vostro stuff, like having these nostro vostro accounts with other big banks. The smaller banks haven't really got the same kind of capital to just be laying dormant, right? So what happens is these smaller banks are actually paying fees to the bigger banks to be able to use their nostro vostro accounts. So the smaller bank will get a request to do a international transfer, and I'll have to go to like a bigger bank in the same country and say, hey, we kind of need to do this transfer. Any chance we can use your nostro vostro account? They'll be like, yeah, that's fine. It's going to cost you X amount of, whatever their currency is. And they'll be like, okay, no problem. They pay the fee. So the big banks are actually making money out of this. So it will appeal a lot more to the smaller banks, but I still think it will appeal to the big banks too in a way, just simply because it just means that they've got more money to free up to now use in other places. Yeah, I just think they've now got a better way to utilize money rather than just leaving it there dormant. I mean, yes, okay, it's collecting money from smaller banks who are also needed to do transfers. Okay, fair enough, but they can probably make much better use of their money and potentially get a much better earning stream if they had that money to give out for, more loans and things like that. Who knows? But I just feel like they'll probably have better use of the money if they was able to not have it tied up in these nostro, vostro accounts. And so that's where I feel like XRP steps in here. This is why I think the banks will be very interested in XRP. Now, I'm not saying every bank is going to use it, but I can't see why it wouldn't get a huge amount of adoption over the years, because just look at what it can do and look at the problem that is actually solving. It's also low fees, right? It's not just about how quick it does it. It's low fee to do it. It's unheard of to be able to do such big transfers for like less than a penny. This is amazing technology that it's allowing people to utilize and banks to utilize. So where I'll say in terms of just the crypto aspect of this, because I did also say crypto, not just XRP. Well, with regards to this, it's more just a thing where I think crypto in general is just becoming the more favorable option to some people, right? So when we're looking at banks and how, there's basically a central authority, right? So if the bank collapses, your money's in problems. You may not be able to get access to your money because it may get closed down and they might shut off withdrawals. And then, you may not have access to the money that you've got there in that bank. Or if you want to withdraw money and, it's a big amount of money, they may say, hey, unfortunately, we can't allow you to withdraw that amount of money, or you may have to give us 3 to 5 days to be able to get that money for you to be able to withdraw. But with crypto, if you self-custody your crypto, it's yours. Yeah, there's no one to say, hey, that's too much, you can't take that much money. It's yours to do as you please. If you want to transfer it somewhere, you do as you wish. If you want to withdraw a huge amount of your crypto, that's up to you. Obviously, there is a bit of a risk in terms of could the crypto go down in value, depending on which ones you've invested in. Yeah, of course. So there's always that aspect, but I'm not necessarily talking about that in this type of this video. I'm just talking about the general perspective of you've not got to worry in terms of an actual centralized authority, because crypto is generally decentralized. So you can control what you do with your money, your crypto. And I think that's where crypto steps in. And I think this is why a lot of people are leaning towards crypto. The more they're seeing these things like the banks collapsing, because they are starting to look at crypto and think, maybe this is actually the safer bet. Now, I do think this will take a lot more time for it to get the mass adoption, but you can slowly see it coming. The more things are happening, the more you're hearing about it, the more it's getting adopted slowly over time. More and more people are starting to hear about crypto and talking about crypto and things like that. It's getting more mainstream appeal and more mainstream attention. So, you can already see slowly but surely the way it's edging into the general people's ears and their lives. So, yeah, that's just my thoughts on this. I hope this has helped you to understand, and I hope this has helped you to maybe think about things in terms of the banking crisis and see where maybe you can utilize this situation potentially to your advantage. If you have got any questions, feel free to drop a comment. I'll be happy to try and help if I can. But if you did like this, please remember to like, comment, and subscribe. But until next time, take care.